Hello, good people, and welcome to Jewel Markets Academy. In our today's session, we are going to talk about how to set and use the 20 and 50 EMA indicator. EMA simply means exponential moving average. This indicator is used specifically for technical analysis. When you're working with the exponential moving average, you're simply looking at average taken over the last 20 and 50 days, depending on which number you pick. So this average simply picks price points over the last 20 days or 50 days and then gets the average. That average price, it means over the next, say for example, 20, 30 or 40 days, the price might not deviate much from that average. And it helps you to determine your entry point, your exit points, but of course, you must combine this indicator with other indicators. As we have said before, you cannot just rely on one indicator to make your decisions. We are going to jump onto the screens and see how fast you are going to set that indicator, and two, how you make use of it after having seen how it behaves over a certain period of time. So come with me. The first thing you need to do is to identify on which platform are you going to access this indicator. For my case, I access the exponential moving average from the tradingview.com. This is a website whereby you can subscribe on a monthly basis, or you can do an annual subscription for you to be able to access not only this indicator but many other indicators. On tradingview.com, the first thing I need to do is to access the kind of pair I want to work with. In this case, I'm focusing on forex. As you can see on the screen, there are many other products which you can work with, but in this case, I would like us to access the Euro USD currency pair. So once you have that, you can launch it. So that being the price setup for that specific pair, it shows you, whichever time frame you choose. You can choose the daily time frame, you can choose the monthly or weekly time frame, depending on your trading style. But for purposes of this discussion and training, we are working with the daily time frame, and the period we are looking at, we would like to look at a period of about 6 months. So once you access that page, as you can see here, you go to the indicators. So under the indicators, just type moving average. Then it will give you the options. Then you can select moving average exponential. So I select once. You can see it has appeared on the screen at the top there. Then I select twice because we need two indicators for the 20 and the 50 EMA. So I select another one. Then you can exit that search option. So these two, they will have some default settings, but we need to change them in order to suit our indicator which you're working with. And you normally change this under the length. So the length, we put the 20-day moving average. The other factors will remain constant. The style, the visibility, those ones will remain constant. Then you can say OK. Then we need to select the second one, which is the 50 moving average. Remember, in this case, we are changing the length, the period we are looking at. So we put 50. The style, we change the color because you picked blue color for the 20. Now we pick, say, yellow for the 50 moving average. The other elements will remain the same. Then you can say OK. So from there, you can see there are two lines which are indicated over there. And we want to see over a period of 6 months, how does it behave, so that we can have an informed decision or discussion on how to use this going forward. And remember, we have said you cannot just work with this indicator by itself. You need to combine it with other indicators. So for example, you can see here there has been a downward movement of the price, but there is a common point of interest which is acting as support. Then you can put a line there. Then going to the top left corner, you can pick the horizontal line, which is used to pick putting the support and resistance. So you put your support there. Then we want to run this, as I said, over a period of about 6 months and see how does it behave when in action. So let's see how it will behave over a period of 6 months. We have already set it up first, and what we want to see now is the behavior of this moving average and how you can make use of it for your trading purposes. So we move, you can say now for about 6 months. You can leave it at that point. Of course, it has started some changes. So having started at this point over here, whereby we had put our support and resistance line, you can see there has been a change of direction based on how the 20 and 50 moving average have crossed. Later on, we'll be discussing these kind of crosses and what they mean. So this support here has tried to push the price upwards. But as much as the price has moved upwards, it tries to deviate slightly from the 20 moving average. Remember this, the blue line is the 20 moving average. But after deviating from that line, it goes back to the 20 moving average. Then that 20 moving average acts like support. Then for some time, we can see here it has run along that line. Continuation of an upward movement, but it doesn't go much further than where the 20 moving average has been set. So you can see along that movement, maybe based on other factors, there are fundamental factors which are moving this kind of pair upwards. They can help you now to know if there is a retrace, how far does the retrace go? In most cases, the retraces will come close to that line, then it continues with the upward movement. But whenever you see the price moving now close to the 50 moving average, there is an indicator of a change in direction. That's the point. The upward trend is now changing back now to downward trend. Because we can see at this point here, where I am pointing, as much as the price was moving along the 20-day moving average, it has now hit the 50 moving average, goes back to the 20 moving average, but those two are acting as support and resistances. But whenever you see this kind of behavior with the 20 and 50 moving average, that's an indication that there is a change in direction which is bound to happen. So what does this mean? It means having put your other indicators, say the support and resistance lines, and then you can be able to see how the price is moving along the 20 and the 50-day moving average, then you can make informed decision on when to enter and when to exit. The first thing we have seen is how to set it up. Under indicator section, select two options for the 20 and 50 moving average. But this, remember, is just a demonstration of what has happened in the past, which we call backtesting. But in real life now, once you know how the price tends to get closer to the 20 and 50 moving average, and those two acting as support and resistances based on other factors, as we have said, the fundamental factors, those are the market news, and also based on the support and resistance lines you have drawn by yourself, then it can help you to know when is the right time for me to enter, when is the right time for me to exit, and that improves your probability to win. That brings us to the end of our discussion today. Kindly leave us a comment, subscribe, and hit the notification button so that you'll be notified once we release our next video. Thank you, and bye-bye for now.